Hey, ever laid awake at night, staring at your phone screen, watching your bank balance tick up and down, and thought, what if it all just vanished? Like, poof? Gone? Especially when we're talking about those shiny new digital banks, the ones promising higher interest rates, slicker apps, and, well, just a whole new way of handling your hard-earned cash. You know, the ones like Sofi. Yeah, Sofi. You've probably seen the ads, heard the buzz. Maybe you're already a member, lured in by the promises of financial freedom and a better banking experience. But here's the million-dollar question, literally, is your money actually safe there? Is it FDIC insured, like they say? Or are you just rolling the dice with your savings? Because let's be real, in today's world, trust is a precious commodity. We've seen the headlines, the bank failures, the market volatility. It's enough to make anyone a little paranoid. And when it comes to your money, paranoia is perfectly understandable. So, we're going to dive deep, cut through the marketing jargon, and get to the bottom of this. We're going to answer the question, is your money truly safe and FDIC insured on Sofi? First, let's lay some groundwork. What exactly is the FDIC? The Federal Deposit Insurance Corporation. Think of it as the financial safety net for your deposits. It's an independent agency of the U.S. government, created in the wake of the Great Depression to restore public confidence in the banking system. Basically, if your bank fails, the FDIC steps in and insures your deposits, up to $250,000 per depositor, per insured bank, for each account ownership category. This protection covers checking accounts, savings accounts, money market deposit accounts, and certificates of deposit, CDs. Now, here's where things get a bit nuanced with companies like Sofi. Sofi isn't a traditional brick-and-mortar bank. It's a fintech company, a financial technology company that offers a wide range of services, from banking and investing to lending and insurance. They operate primarily online, which is part of their appeal. But that also means they don't necessarily fit the traditional banking mold. So, how does FDIC insurance work in this context? Sofi itself is not a bank. Instead, they partner with established banks that are FDIC insured. When you deposit money into a Sofi checking or savings account, those funds are held at these partner banks. This is crucial, because it's these partner banks that provide the FDIC insurance, not Sofi directly. This means, in essence, that your money is FDIC insured, but indirectly, through Sofi's banking partners. You're not directly dealing with the FDIC, but you're still benefiting from that government guarantee. This is often referred to as a program bank structure. Now, here's where it gets important to understand the details. Because just saying FDIC insured isn't enough. You need to know which partner banks are holding your funds and how that impacts your overall coverage. Remember that $250,000 limit? It applies per bank. So, if Sofi is using multiple partner banks and you have more than $250,000, you could potentially spread your deposits across those banks to maximize your coverage. However, if Sofi only uses one partner bank and you have over $250,000 in your Sofi accounts, anything above that limit is not insured. This is why transparency is key. You need to know which banks are holding your money. And Sofi, to their credit, generally provides this information. You can typically find a list of their partner banks in their account documents or on their website. It's essential to review this information yourself, don't just take their word for it. Another crucial point to consider is how Sofi's other services interact with your deposits. Sofi also offers investment accounts, loans, and other financial products. These are not FDIC insured. Investments, for example, are subject to market risk and can lose value. FDIC insurance only applies to deposit accounts. So, if you have both a savings account and an investment account with Sofi, only the savings account is covered by FDIC insurance. It's also worth noting that some Sofi services, like their cash management accounts, might have different structures or limitations regarding FDIC coverage. Always read the fine print, the terms and conditions, and any disclosures provided by Sofi. Don't just skim, actually read them. It might seem tedious, but it's your money we're talking about. Now, let's talk about the practical implications. What does this all mean for you? First, if you're using Sofi for your everyday banking needs, like checking and savings, you can generally rest assured that your deposits are FDIC insured up to the $250,000 limit per bank. Second, understand the limitations. If you have a large amount of money, consider spreading it across multiple FDIC-insured accounts, either at different banks or by understanding how Sofi's partner banks work. Third, always be aware of the risks associated with non-deposit products, like investments. These are not FDIC insured and should be treated accordingly. Fourth, stay informed. The financial landscape is constantly changing. Keep up with the latest news and regulations, and don't be afraid to ask questions. Contact Sofi's customer service or consult with a financial advisor if you have any doubts. So, to answer the original question, is your money safe and FDIC insured on Sofi? The answer is generally yes, but with important caveats. It's crucial to understand the program bank structure, the $250,000 limit, and the distinction between insured deposits and uninsured investments. Don't just blindly trust. Do your due diligence. Verify the information, read the fine print, and stay informed. Because at the end of the day, it's your money, and you're responsible for protecting it. With that said, thanks for watching, and until next time.